Hello everyone, welcome back to the Velocity channel. This time we're going to show you in numbers the velocity way versus the traditional way of paying down your loans. And I trust that you will choose the correct and efficient and effective mode of paying down your loans. Are you ready? Here it goes. Listen, we have the velocity versus traditional. Now, we're going to be talking about a mortgage, but the velocity banking method works on mortgages, it works on car loans, it works on student loans, it works on any type of loan, right? Maybe you owe your mother-in-law, whatever it is, right? Any type of loan that is amortized, you can actually get paid down much quicker and improve your credit score as well. All right, when all of the methods are in place. Now, we want to make sure that we're giving you, right, a snapshot. Let me go ahead and move over here so you can get a better view of it. This is basically what you're going to need, right? And that's what we are going to go through right now. Now, traditionally on the amortized side, we're going to be talking about this mortgage that you're paying $1,200 a month for. Right, you're still slicing the pie, you're not quite sure that you want to implement the velocity banking yet. Let me show you what's happening to your money, okay? It's getting divided up, first of all, okay? And we got a lot to say about that, right? It goes right in line with the price segregation and how we want to avoid that, but I digress. $950 in interest, right, versus $250 in principal. When you're first paying that home off, right, you're paying an astronomical amount in interest for the first years, right, until you get way down the road, right? The lender has had their interest and boy, they're eating good, right? They're going on vacations while you're slaving away, all right, absolutely. And that's what's happening. And so $950 in interest, of course, it's going to go down over the life of the loan, but it's not going to be till way in the future, right, that it'll actually switch. So this is what you're going to be paying. Now, in 4 years, right, 4 years, you would have paid $13,000, okay, for the principal, paying that principal down, and $30,000 plus. And now I know the number is huge, much more huge than that. But I just wanted to show you, hey, I'm just giving you some numbers, right? Because it's going to be much huger than this. I think it's like 40 something, or maybe even $50,000 in the 4 years. But just to bring it down, what, 20,000 to 30. Look how astronomical that is. 30,000 is still an astronomical number to pay in interest, but that's what many are paying, okay? Versus if they had done it the velocity banking way. What is the velocity banking way? Taking that line of credit, taking the $13,000, chunking away at that huge mortgage principal, and then paying the line of credit back with their income over what, 6.5 months? Just in 6.5 months, you would have paid the $13,000 in principal. 6.5 months, not 4 years. Huge difference. We're talking about 6.5 months, not 48 months. Okay? And in interest, how much did you pay? $2,000. Actually, it's going to be much less than that because this line of credit is at 21%. Okay, which is much less than the $2,000. But I just had to bring this out to let you know, look at the difference. And these numbers right here, this is under and this is over the amount. It's actually $1,400 that you're spending in interest. But look at the stark difference. And you mean to tell me that this isn't working for you? Right? Folks, it works. Many have already testified that they paid off their homes. They didn't even have to. They wanted to. Because look at the conversation that you can have with somebody. They're going to ask you how you did it in 5 years. They're going to ask you how you did it in 1 year. They're going to ask you, how did you do it in 7 years? This is a 30-year mortgage. That's out of sight. and you're going to introduce them to the velocity banking method. You're going to pay this information forward. And you are going to be the answer to their economic woes. So let me tell you one more time. Go ahead and get a picture of it. Absolutely. Listen, there is no copyright on 2 plus 2 is 4. Folks, you can use this information to teach others. Absolutely. Velocity banking method versus the traditional. You choose. Folks, if you loved this video, like it, love it, comment, say it, and then share it infinity times. We got to get this whole world and the whole galaxy velocitized. God bless, and you have a good night.